Hey folks, AJAY VIKRAM here. The price is what you pay and the value is what you get. In this video, I will explain about the remaining 4 concepts of money market, and I yesterday explained about the money market, CRR and SLR, which for your information, and I explained about one of the type of money market which is a call money market. In this video, I will explain about remaining 4 topics, which is repo, repurchasement agreement, and commercial papers, certification of deposits, and last thing is treasury bills. Let me start with repo, repurchasement agreement. Repo is the interbank lending and borrowing facilities. And for lending, if your bank wish to lend a money from if your bank wish to borrow money from another bank, they have to give some collateral for borrowing money from another bank. Generally, this is called as repo, and for that they will pay some certain percentage of interest rate to repo. Generally, in repo, the banks to banks or banks to primary dealers and primary dealers to primary dealers, which I already told you about. Investment banks to commercial banks and to some other commercial banks, they will lend and borrow money to each other. And the current repo rate in India is 6.25%, and we will going to see about reverse repo rate. We came to know that what do you mean by repo rate and what do you mean by reverse repo rate. If the bank or the primary dealer who have the excess amount of cash or surplus of cash, they will give to RBI, which is Central Bank of India. By giving that, they will get some reverse repo interest. That is, the current reverse repo rate is 3.35%. It's a current repo rate, reverse repo rate. And we will going to see about certificate of deposit. Certificate of deposit is a promissory note, which is for example, money is a promissory note, and certification of deposits might be like banks and eligible financial institutions can be the part of certification of deposits. And this certification of deposits, it's like fixed deposit. See, however, we are doing a fixed deposits in bank and we will get some interest out of it. And the only difference in fixed deposit and certification of deposit is, the fixed deposit is whenever I am the person who is going for bank and I am repaying I am depositing some money for some span of years. After that, whenever I am going to get that money back, I am the only eligible person to get that money. But in certificate of deposits, if I am paying some money or depositing some money, and I will get some certification of deposit, and the person, I am only not a person, the person who is holding a certification of deposit can be eligible to borrow that money from bank. If I am holding a certification of deposit by paying by paying a principal to the bank, but see, the certification, I already told you that money market is only useful for the short term period, which is upon 1 year. It should not go beyond 1 year. It should be within 1 year, so that if I am paying some amount and getting a money and I am getting a certification of deposit from bank, after that I will give some amount for some another person to certification of deposit. He is holding a certification of deposit, so he have a right to purchase that certification of to submit that certification of deposits, and he will get the money from bank. This is generally called a certification of deposit. The bank and eligible financial institutions can do this certification by issue their certification of deposits. This certification of deposits is issued for 7 to 365 days. It is issued at dematerialized form, and it is a OTC product. I already told you that difference between OTC and exchange. Exchange are the regulators and there is no counterparty risk will be there. For example, if I am doing a trading in exchange, there will be a SEBI is there, who is protect the interest of the investors in interest, and they will monitor the entire financial instruments. So the SEBI financial market, so they will SEBI is a regularly act as a regulatory for exchanges in money market. See, in money market there is no such regulator body will be there. So it is a OTC, it will be there, but in money market it will there, but in certification of deposit there is no regulator body will be there. It is like a promissory note. Certification of deposit are issued at maximum of 1 lakh rupee in issued at a face value, and these are issued in the multiple of 1 lakhs, multiple of minimum amount. I already said you, it is minimum amount is 1 lakh. And so certification may be issued at face value. For this, they will give some discounts. For example, if I am paying a face value of 1 lakh and getting a certification of deposit from bank, I will not if the bank is giving some discounts. For example, the bank is giving discounts discount for the certification of deposit for 95,000. They are asking for that certification of deposit, and when I am submitting the certification of deposit, they will not give 95,000. They will give 95,000 plus 5,000, because their face value is 1 lakh. So this 1 lakh, this 5,000 will be my profit. Either they will give discount, or else they will give the coupon amount, which is interest. They will issue that face value 1 lakh, and I am purchasing the certification of deposit for 1 lakh, and I will get some interest out of that 1 lakh. This is a certification of deposits. And next topic is a commercial paper. Commercial paper is an unsecured money market instruments which are issued by corporates, include non-financial corporates and financial institutions, like entities like cooperative societies, unions, limited liability partnership and other corporate entities are eligible, and they are which are all in presence in India and having the net worth of 100 crores or more, or other entities which are approved by RBI. They all are eligible to issue commercial paper, and the commercial paper are issued at discount and redeemed at par. As I said, some examples in certification of deposit, however they are giving some discount, and they were when they are I am resubmitting my certification of deposit to them, they will redeem that par. So for example, I already told you 95,000. For 95,000 I am purchasing a commercial paper. Whenever I am resubmitting my commercial paper to the particular agency or companies, they will give my amount as 1 lakh. This is issued at discount and redeemed at par. And they offer document of commercial paper should disclose the end use of that money borrowed. It should if they are issuing under 270 days, there is no approval from any regulator like RBI. There should be no approval from RBI. After it going beyond 270 days, they should be approval regulatory. The regulatory body should give some approval, and it should required by the company to issue beyond 270 days. This is commercial paper. And treasury bill is a short-term debt obligations by government, and the treasury bills also as like commercial papers. They are issued at discounts and redeemed at par. We have completed the money market instruments, the types of money market instruments, and topic of money market, and I am going further about for fixed income securities in another video. And if you really understood the video, just share it to your friends and like this video, and smash a subscribe button. And until bye from Ajay Vikram, and I will see you on another video. Thank you.